in several months, and we've given up on all those objectives. I mean, for all the talk of regime change, the regime hasn't changed at all. If anything, it's probably hardened. It's probably the same regime, or it is the same regime. It's probably just more radical. And, for people who may think, well, at least we diminished the terrorist threat, I doubt it. We probably, augmented it. We probably made a lot more enemies in Iran than we had before. And now, it'll be easier for the terrorist groups to recruit people, to come after us somehow because of, the lives that were lost in Iran as a result of the war that we decided to start. We didn't have to start it. We just did. But now we have to figure out a way out. And I think the Iranians know they've got us caught between a rock and a hard place. But I said from the beginning, this was going to be a quagmire, just like Iraq or just like Afghanistan. Every time we go into the Middle East, we can't get out. And Trump recognized this, at least, as a candidate, and during his first term. And when he ran for office for his second term, it was the same thing. No more wars, no forever wars, stay out of the Middle East. And what do you know? Right in there. And in so doing, he ended up losing a lot of his supporters that maybe he should have lost based on the economic policies. The big, beautiful bill and the massive deficit spending associated with that, the tariffs. I'm going to talk a little bit more in this podcast about the tariffs when we get into the horrific trade data that came out this week. The tariffs were supposed to solve that problem, but the problem continues to get worse. But I want to continue to focus on the markets and the reaction to the war. The dollar did move up, but not very much. And I think the big story here is how little the dollar rose in response to the re-escalation of the war. I mean, we're barely above 101 on the dollar index, so not getting a big bid. But what's the most significant, I think, is the action in the Treasury bond market, because bond yields are almost at new highs for the cycle. If you look at where the yields closed on the 10-year Treasury, we're at 4.58, almost 4.6%. And the 30-year is at 5.07. Now, these are the yields that we had when oil was about $100 a barrel. So oil has a long way to go to get back up to the highs, and I think it will get back up to the highs. And oil and bonds were highly correlated. Bond yields and oil prices were rising together. Well, here, oil has only recovered to $75, and bond yields are already at the highs. And what that suggests to me is that when we see oil prices hitting new highs, bond market is going to be much higher than it was before. And that has substantial negative consequences for the U.S. economy, for the housing market. The stock market is just whistling past this interest rate graveyard, not appreciating this, and piling into these tech stocks as if debt and interest rates don't matter to these companies, when they matter big now because they're borrowing so much money to build out the AI infrastructure. They are taking on tremendous amounts of debt, and the payback on these investments, if there ever is a payback, is into the future. And so you have to discount the present value of that future return, and interest rates are very relevant to that factor. And in fact, the FOMC minutes came out today, and that also should have given equity traders a cause for concern. But again, they seem to dismiss the implications of those minutes. I'm going to get into those minutes on the other side of this break. We got the release of the most recent FOMC, Federal Open Market Committee meetings. And look, the most significant aspect of this meeting, and this is the first meeting with Warsh as a Fed chair. And remember, Powell is still sitting in on this meeting. He's just no longer chairing it, but he's there. And so back in March, when Powell was still leading the committee. Not a single FOMC member was expecting a rate hike this year. Right? They were still talking about rate cuts. Now, fast forward 90 days, and now nine of the FOMC members, I think there's 13 total, 9 of them see a rate hike this year. 9. That none of these 9 saw it 3 months ago. It's the same economy. I mean, how can things be so radically different that 3 months ago there was no sign of rate hike by these 9 guys, and now all of a sudden, we see rate hikes. The data didn't get that much worse. I mean, if you don't know what's going to happen or where rates should be, and then 3 months later you have a completely different opinion, this is all nonsense. This is all a charade. In fact, one guy who saw no rate hikes, I don't know if it was a guy or a gal, but one of the FOMC members who had no rate hikes now has 3 rate hikes between now and the end of the year. So he went from 0 rate hikes to 3 in the space of a meeting. Now, to me, this is probably all theatrics, because now we have a new Fed chair who is trying to be hawkish, right? He's trying to pretend that he's hawkish by talking. And in fact, several of these FOMC members did indicate that they wanted a rate hike at the June meeting, but they decided not to. But they talked about it, or they thought that maybe it was appropriate, but they weren't in the majority, and so they, unanimously decided to wait. But I think that the FOMC under Walsh is now trying to deliberately create the impression that they're now got their inflation fighting chops and that they're independent, right, from the president, because the president has made it clear he wants lower interest rates. But the Fed is trying to maintain its independence, and at least they know that they can be independent now without incurring the immediate wrath of the president. Because in the past, the president was very vocal in his criticism of the Fed under Powell, specifically Powell, but also, Lisa Cook trying to, find a way to go after her. But I think the FOMC was concerned about that. They know that Walsh has a honeymoon, that there's going to be some time before Trump can actually come out and speak critical of Walsh, because he just spoke, so flatteringly how great this guy is, central casting, ordered him up, his standard line, but